Good morning, traders. It's Wednesday, February the 7th. Taking a look at the charts. This is the SPY daily chart. You can see the precipitous waterfall, the big gap, exhaustion gap to the downside, and strong recovery yesterday. Really, we've had our cycles kind of showing that there's a bottom coming around here, and we are going to play that with the VIX. We did take a stab at the UVXY short play yesterday. If we take a look at that, you can see the big gap up in UVXY, and it dropped from more or less 30. In pre-market, it was trading up in the lower 30s, way up here in the 32 range. It dropped all the way down to 15 by the end of the day. This is likely going to continue to chop around for a bit, but should fade its way back down to around the 10 mark over the next little while. So overall, I do anticipate the VIX to fade back down. Now, if we look at the VIX and just zoom way out in time, that VIX obviously is crushed here, but more or less the VIX came all the way back up to this previous high that we saw here, where we had that August 15th spike, and then eventually the VIX just kind of dissipates as fear usually fades away. This level of fear doesn't mean it's going to drop like these small spikes where it gives back the entire fear within 2 or 3 days. This is enough fear to create kind of some havoc and take a little longer, a couple months to potentially fade all the way back down to the low. But overall, we've seen a good amount of the VIX come all the way back here in the last couple days, in the last day already. Now, if we take a look over at, let's zoom into the futures chart here of the SP 500. The futures cycles are showing that we're going to probably have some more real violent price action choppiness potentially with the cycles before we start to see a rebound, and that's to be expected. And same with the NASDAQ. Looking at the NASDAQ, oops, that's the chart of bonds. Here's the NASDAQ here, showing that probably going to see some volatility. When we see the cycles move down, that means there are some short-term cycles pulling down against the bigger cycle moving up, and that means we get some pretty good intraday swings. So expect some high volatility. Now, I'm just going to zoom back to the August 5th, the August crash that we had back in 2015. Here is the August 5th crash, very similar. This is when the VIX spiked up to 50 last time. Precipitous fall, and then we kind of rebound back and kind of chop around and slowly grind a little bit higher as value kind of buyers step back in, the traders who trade the extreme oversold anticipating a rebound. So I do expect us to see it kind of lift back up and regain a good chunk, maybe half of the move that we've seen. I think we're going to see similar price action to this where we're going to trade sideways, rebound a little bit more, trade sideways for a while, and have lots of price gaps. You can see the price here, the markets. It may not seem like much because this drop here is very big, but these are huge. These are 1-2% gaps in price. And the market is very volatile over the next several weeks going forward, and then eventually we should see things kind of smooth out, and we should see volatility kind of fall back into smaller ranges, and the gaps should be minimized. But expect some big day-to-day flip-flopping of price, and probably minimize our trading a little bit, and only look for some key setups and maybe some more stable investments. Potentially gold miners are actually looking oversold here. Speaking of gold miners, let's just pull up the chart of gold here. Here is the chart of gold futures, the daily chart, and we've got the cycle analysis showing that we've been in this nice little bull flag, kind of losing a bit of steam over the last couple of days here, but overall showing that we should have another run up to this blue line, I would think, which is a pretty significant resistance level going way back in time, way over here to 2016's high. If we zoom way back even further, we're going back to another significant high back in 2014. And of course, this is a major multi-year basing formation. This is a stage 1 basing formation. If we start to break above this first blue line here, we still have another critical line around the 1420, 1430 area. But if we start to clear those, we could be off to the races to all-time highs in gold going forward. This is a major multi-year basing station. The longer it bases, the bigger the move it can have going forward. So I am bullish on metals, starting to get more bullish here on the short term. And if we zoom in, look at the gold miners here, GDX. We played this downside with the Dust ETF. We caught a 20% move there. We rotated out about a day ago, and it's continuing to wash down. It's set to gap lower again today, but we do have cycles bottoming out. We are getting into this previous pivot low. It is oversold, and I think we're going to see investors start to look for safe havens because the fear is still high, and people are going to rotate into gold, silver, in miners as a safe haven play. So I think we should see naturally money move into this, and it also bodes well with our cycle analysis pointing to a pop in price. Now keep in mind these cycles, this cycle shows potentially going all the way up to the 25 area. Cycles do not mean price is going up there. It simply means price should have an upward bias. Buyers should be moving in. The gold miners, for example, this ETF may just move up and stall out somewhere here. It could just be a bounce. Just that could be it. It doesn't mean price is rallying that high. Cycles are just the bias of which direction should be in favor. It doesn't mean price is going to rally and then pull back to 24 on the dot. It does not work that way. It's just the bias. So we're looking for a gap down today, potentially an oversold bounce, may just kind of bounce it and come into resistance here and stall out, or you never know, it could rally up to there, but that's not how cycles work in terms of projecting price. It's just the direction you should be in favor of. Looking over at silver real quick, down 0.6%, continuing to kind of move down. Ideally, I'd love to see a big flush down in gold, silver, and miners today. Silver has got a little bit of a bearish formation. It's moved down. It's kind of consolidated here, and it'd be nice to see the second half of the move and a big spike down in silver for it to catch up. Gold miners are trading equivalent to down here. Silver has yet to get there. It'd be nice to see silver get there for everything to kind of bottom out around the same time. And again, if you look at gold, gold has actually been holding up really well because it's the out of all the different precious metals, gold is the most of the seen as the safe haven. So money hasn't really been flowing out of gold as much. It's been holding up as investors slowly rotate in and support the price. So it's very muted because it's seen as more of the safe haven. Looking over at energies, natural gas down 1.2%. We did play an inverse ETF. We played this to the downside for a quick 9% gain. It's starting to look like it's bottoming here. We're at previous support. The cycles are about to move up here, so it's starting to look like a potential bounce play. And looking at crude oil, it is starting to break down. We talked about this the other day, that we've got this potential neckline here. Yesterday it closed below it. Today it gapped up higher to that neckline. It's selling back down already. And we could start to see this breakdown in reverse. Overall, this pattern here, you usually go from the neckline or the top of the head to the neckline. This distance is the potential for the breakdown to the downside. If you were to measure it, we could fall right below this 62 level and suck back in down below here. We could see a fairly significant reversal in price. We'll see how things unfold. Cycles are pointing to lower prices really for today and potentially tomorrow, but then we do have the cycles showing a bounce, which is support. So there's a good reason for a bounce here for a couple of days. We'll have to see how things unfold, but crude oil is kind of rotating out of this head and shoulders formation to the downside for a little bit of a negative bias here. Last but not least, here is the Bitcoin investment trust. I kind of use it just to follow Bitcoin. Obviously, we've got our cycles on here. I can clean up a couple of these lines. I'll get rid of some of these moving averages just to clean things up. But overall, the cycle here has been bottoming out for Bitcoin for about almost a month. It's been in the same location, and cycles update each day depending on how things move. Various cycle lengths will update, fall in favor, out of favor, and so sometimes these pivot highs and lows will move and shift. And when something stays in the same spot for a long period of time, several weeks, it starts to provide a stronger bottom. So overall, we've got potential here, if we just look forward, that we should see Bitcoin have an upward bias for a couple of weeks here. Now, this is the daily chart, so obviously every 5 bars here is about a week. So we're looking at a couple weeks of potential upward bias. Doesn't mean price is going to rally huge. It may just come right up underneath this resistance area on the chart and bounce up to here and kind of stall out for all we know. But at this point, Bitcoin and more or less cryptocurrencies, they move similar to the stock market, that when Bitcoin is going up, we tend to see the basket of cryptocurrencies move together. Sometimes there's a delay, Bitcoin first, the other cryptos kind of follow suit. So overall, expecting a bounce here in Bitcoin going forward. Anyways, that's it for this morning. Talk to you in a little bit. Bye-bye.